morning, everybody. It's Brian. It's Wednesday, the 5th of August. So here for just a quick update on what's going on in the markets, what we're looking at for the day, things that will be driving trading decisions. So let's just go ahead and get to it. We'll keep it fairly quick this morning. I don't see a need to spend a whole lot of time. We've got some news coming up. Today is a news day as far as some key reports that are coming out. We've got ADP, non-farm employment change, which this is the precursor to non-farm payroll. Non-farm payroll occurs on Friday. This is the precursor to that. It's a medium impact report, but it could be a little more impactful just based on where we are and kind of the undertones in the market that are out there. But we've got this ADP employment change report coming out, followed by the services PMI and then the non-manufacturing PMI. All of these could be that catalyst that adds some level of volatility to the market. Now, what does that do to the market? Which way is it going to go? Which way are we trading? That's up to the market. No one has a crystal ball to know what is going to happen next. We have to have a process and a program and a method that we follow that dictates which direction we trade. It should never be based on our gut. It shouldn't be based on a whim of what comes out during the news. We want to trade based on what the market is doing, how the market makers interpret the news, and where that drives things in the future, right? Just because the news comes out and it maybe is hugely positive or hugely negative, it doesn't mean the market is going to move in any specific way. It means that the news came out. That's all we need to know. When is the news coming out, so that we can avoid that news-driven chop and volatility, and then we can take action after the things kind of normalize and trade with the direction that the market is going at that time, right? So with that said, let's go ahead and get to it. Over here in the forex side of things, we don't have a whole lot of opportunity this morning, actually. Just kind of looking through the various currency pairs, kind of just scanning through here before the market session begins. I like to get an idea of where the opportunity is, and the opportunity typically is going to lie in those currency pairings where we've moved a fraction of what our typical move might be, right? So for example, here on the Euro CAD, we've moved 41 pips on an average of 100 plus. The Euro CAD, the pound CAD, same thing. We've moved 65 pips on an average of about 120 to 130. So we're roughly half of or less than half of the typical ranges for these two currency pairings right here. U.S. versus the yen, we've moved 36 pips on an average of about 60. So again, potential opportunity there. So there's just kind of looking through here to see what we might want to be watching if we get the right opportunity to trade it. Would be these. Looking across here, a lot of the other pairs have already moved a significant amount of their typical range, so it makes them a lot less attractive. What are we watching for once the market gets going? Well, we're going to watch for divergence. We're going to watch for a strong currency that starts to break steeply and rapidly to the stronger side, and we're going to watch for a weaker currency that begins to weaken more. It's being sold off, so it's going steeply and rapidly to the weaker side. And as we see that divergence between those two currencies, that'll allow us to make a trading decision. And so we'll be really watching those CAD pairs that we just talked about before, which all right now are above the midpoint. But if the CAD suddenly starts moving steeply and rapidly to the stronger side, and we have that euro breaks down or the pound breaks down, that could be a great trading opportunity. Or converse to that, if the pound stays trending stronger and keeps moving up, and the CAD suddenly moves steeply and rapidly down, so below this midpoint. It's been fairly flat, really, for since the start of the London session. It's been fairly flat. So potentially, if we get some action on the CAD weaker, that could be an opportunity to trade those pairs that we just talked about. But the pairs that seem to be making the most sense right now would either be the euro versus the CAD, or the pound versus the CAD would be the two that really hit the radar as currency pairings that have, up to this point, leading into the new U.S. session, have moved significantly lower than their typical range would be. Now, do keep in mind, as we say that, some of the things that can drive what's happening here. We have the ADP report that comes out. We've also got on the CAD trade balance, which is a low impact report, but then later in the day, crude oil inventories, and oil can have a fairly larger impact on the Canadian since they're big oil rich country that has a lot of production up there. So anyway, it'll be interesting to see what goes on for the day, but do watch those couple of currency pairs we just talked about, the euro, the euro versus the CAD, and the pound versus the CAD. All right, switching gears over to the futures market. Man, just a tear yesterday. it just took off. As we can see, we talked about 3,300 as a potential level up here, and I was actually looking at this. We were talking about yesterday that we're in a long bias, so the 4-hour bias was long, the 30-minute bias was long coming into the day yesterday. And this is where we were yesterday, where my cursor's circling and moving. So as we were doing our talk in the morning, we were right around here with these red candles, and we were talking about, if we got breaks above certain levels, we'd look to go long from there. And then I also mentioned that 3,300 as a big whole number could be a potential spot for a reversal. Man, it end of the day blew right up to 3,300, pulled off of it a little bit, but then trading stopped, and after hours trading, this thing is just rallied on. It just continues to baffle me. But again, that comes back to why we don't trade based on our emotions. We trade based on our trading plan. Also, if we are going to be counter trend, which we talked about yesterday, if we're going to be counter trend, keep in mind the trend is like that train that's moving, and if we're going to step in front of it, we need to have a plan to get out of the way if it doesn't show any signs of stopping. So if you're looking for reversals at 3,300, we should have cut that pretty short and gotten out of that trade if you did trade that late in the day. For us, for the trading plan that I talk about here in class, we only trade the first couple hours of the day. So yesterday there weren't any trading opportunities for us because things never came back. It just took off and never even pulled back. Didn't even flinch. It just moved. It was crazy. So anyway, here we are for the day. What do we do today? What's going on today? Well, let's have a look at today. What's the plan? Well, we're still in a long bias. So 4-hour bias is still long. 30-minute bias is still long here. We're pushing, pretty up to new highs up here. Not really new, but new for the last few months. I think we have to get up above like 3360 or something, I think, in order to really crack a new high for the year so far. But back in January we were up here, we're at like 3360. So anyway, right now we're just pushing up. Off hours trading, we've really pushed well beyond 3,300, and we're sitting up here at this 3,320 right now. So 3,320, big number, kind of whole number. 3,316 is where my line is drawn. So we're kind of in that range of the resistance point up here. I certainly would at some level expect this to pull back at least back down to 3,300 to retest this during normal trading hours. So we may see a retest of 3,300, but again, who knows? Depending on what happens with news and how the market sentiment feels about cracking this level, we may just see things keep blistering on in their current direction, which just defies all logic in my opinion. But again, the markets could be irrational so much longer than we could be solvent, which is why it's so important to have a plan of action for how you approach the market, because the market does not care about my opinion or your opinion or anybody else's opinion about what it should be doing or could be doing or anything else. It does not matter. We just have to trade what our trading plan says. That's what gets us the results. Have your opinions. I have my opinions, but don't trade your opinions. Trade the trading plan, right? So anyway, long and short of this, I would expect a pullback here at some point. So we can look for pullbacks, back down to 3,300 or around 3,300, and then look to go long from there, because the trend is long. So we want to be in a long position. Flip side of this, another way to go is to look for lower highs and lower lows on the 30-minute, right? Lower highs, lower lows, and then trade a breakout of the top of that lower high, or of the previously closed session, and use the lower low as your stop loss. So that's the other way to trade it. But at this point, I would really be hesitant to look to just jump into something at the very top here. I'd want to see this pull back and take a long position off of the pullback. So certainly if we get back around 3,300, that would be an area to potentially buy off of. All right. So and of course, with that said, have a stop position in there, because if it reverses, you want to be able to get out of the way if that train starts moving in the other direction. But for right now, bias is still long here in the S&P. And the bias is long until it's not long anymore, and we have to make that decision around that. So anyway, that's what we're looking at there. So look for pullbacks around 3,300 and see if we can't take another long position from there. Crude, same thing, man, just blistering move yesterday. So here we are up to 43.50 it touched this morning. Just a face melting rally on crude. Yesterday bias was short, so we were looking for short trading opportunities, and again, it just took off here, crossed, showing us that the 30-minute level had crossed, and really never looked back. Never, even if you were trailing, looking to get in off of that higher low, still it never even paused for a moment in the early hours of the regular trading session. And here we are, just continuing to blister up on crude. So we'll wait and see. The crude oil inventories report might have an impact on this. We'll see. Definitely, if there's any signs of an economic slowdown, again, signs that the recovery isn't doing what we expect it to be doing, which at some point, I'll save my commentary for some other time. Have that over a beer. So crude, we're into a 4-hour bias is long, 30-minute bias is long. So we'd want to look for pullbacks and then take it long on crude. So where would the pullbacks be to? Well, 42.50 was our high back here that has now been broken. So 42.50 would be a level to watch for a pullback if we can get back down there to buy off of. It's really the only key level that's setting up. Down below that's about 42.30 down here would be the next level below 42.50. But you'd want to see a pullback for sure. I like the method of, again, just waiting for lower highs to be made, lower highs and lower lows, lower highs, lower lows, and then buy off of a break of that previously closed lower high and put your stop loss at the bottom at that lower low. So, and again, just trade with the trend, with whatever that bias might be. Gold, same thing as these other two, just on a tear yesterday. Broke out of the area we were looking at and just continued on. I expected maybe to see a little stall around 2,000. It didn't even blink. It just blasted straight through here and has continued up, which is great. But one thing interesting here is what we're seeing in gold and what we're seeing in the S&P. Tells you that there's some. Well, anyway, I'm gonna save my commentary on that stuff. It doesn't make sense. I really have a feeling this thing's about to crumble. But again, we've got to wait until our trading plan tells us it's actually made that reversal. And right now, there's no signs of this thing stopping. So we'll let the government printing press keep putting us deeper into a hole, I guess. So anyway, gold cracking on, man, just moving like mad. What would we be looking at in gold? Well, we'd still be looking for buying opportunities. Gold is definitely a long bias here on the 4 hours and a long bias here on the 30-minute. So, we'd be waiting for some sort of a pullback to allow us to get into this trade. If it does drop back down to around 2,000, we'd certainly want to look to buy off of that. I don't think it can possibly. Well, I didn't think he'd get up to where it was here yesterday either. I don't know that it would come back to 2,000 today, but right now if it pulled back to this 2040 to 2030 area would certainly be an opportunity to look for long trades off of that. So that's where we are for the day. So anyway, that's it for now. I'm gonna let you guys get on with your day and watch what happens around non-farm or the ADP non-farm payroll report. See what the numbers come out there. Don't trade it right away. Let's let the market open and see how the market reacts to the various reports that have come out pre-market, and then see what the trend is for the day, and then trade from there. But obviously, trade with a plan. Trade with a plan. Got to have a plan. Got to have a reason for entering everything we do, and it shouldn't be a reason that you're making up on the fly. When you're making up a reason on the fly, you're doing out of emotion, fear, whatever it might be. Plan out what you're going to do during this time of the day before the market session begins, and then execute that plan. And if you've got a plan that says, I'm going to wait until this report comes out, and that report comes out, and then I'm going to see what the market conditions show me, I'm going to trade this direction. And if the setup doesn't occur that allows you to trade, then you don't take a trade that day. Okay, so practice that. Anyway, so that's it for me. I'm gonna let you go. If something does set up and gives us that opportunity where on one of these we get that pullback we're looking for in one of these long positions, then obviously we'll post that in and talk about it like we did earlier in the week. So that's it for Wednesday. I will leave it here. You guys have a great day. We'll talk to you soon. Bye.